Greetings and salutations, it's David Duford. Today we're going to be reviewing the life insurance basics for the life and health insurance exam. If you're watching this video because you want to actually pass the life and health exam, hopefully on the very first try, then this video is for you. We've got 20 questions that are exemplary of what you're going to see on the final examination, and we're going to go right through them. We're going to go through the questions, the answers, and then my focus here that you're going to find is different from the other practice exam videos that are out there on YouTube is that I want to focus on how you can recall and remember how to answer these questions correctly. One of the biggest goals, of course, is to just get past the exam so you can start selling insurance and helping people. And a lot of this information, frankly, you may not necessarily need to know when it comes down to it, but it's important still to pass the exam because you have to in order to do it. So with that said, let's jump right in. All right, so what is the primary purpose of life insurance? Is it to A, build a retirement savings, B, provide income replacement after death, C, to reduce taxes while still alive, or D, to guarantee investment growth? The answer is B, to provide income replacement after death. And so the explanation is life insurance is designed to create an immediate estate by paying a death benefit when the insured dies. The main function is to provide financial protection for beneficiaries, ensuring loved ones can cover expenses such as mortgage debts or living costs. Now, all of this other things, they are possibly things they could do, but that main thing is to provide a cash benefit upon death to replace things like income. That's the most common reason why people use it. Number two, which type of life insurance provides coverage for a limited period only? Is it whole life insurance? B, universal life? C, term life? Or D, variable life? The answer is term life insurance. And the best way to remember is that term terminates, or term lasts for a term of time, not your whole life of time, okay? So anytime you see limited period, that's basically means a term of time. So think limited term or limited period means term insurance, okay? Term insurance covers you for a specific term or specific period of time, and there you go. Okay. Number three, what feature makes whole life insurance different from term? Because it A, has cash value accumulation, B, it requires no premiums, C, only covers for temporary needs, or D, it cannot be used as collateral. The answer is A, it has cash value accumulation. So just kind of going through some of these answers here. It requires no premiums. No, the life insurance requires premiums. So that's, you can throw that question away. C, it covers only temporary needs. Well, that's what term insurance does. Term is for temporary obligations. So when you think term, think temporary. And then D, it cannot be used as collateral. Well, it can be used as collateral because the cash value has some sort of intrinsic value. So it says it cannot, but it can, so we know that's not the answer. Whole life not only provides lifetime protection, but also builds a guaranteed cash value that grows tax deferred and can be borrowed against. Term insurance does not accumulate cash value. When must insurable interest exist in a life insurance contract? At the time of death, B, at the time of application, C, at the time of a policy loan, and D, at the time of claim payout. The answer is B, at the time of application. So just to remind you, an insurable interest is somebody who would have an interest in you not dying to get the money. So for example, if you have a situation to where somebody, you take a policy out on somebody that is like a famous person, don't do this, I'm just giving an example. Well, you don't have an insurable interest in that person, which means you may be motivated to try to get rid of them. This actually used to be a thing back in the day, where people would take out insurance on strangers, and then they would wind up dead, and then some random person would wind up rich. Well, that's not a thing anymore. So you want to have insurable interest, which is a legitimate financial or emotional relationship, must be present when the policy is issued. After that point, it doesn't matter if the relationship it changes. So like if you're married to your spouse and you get divorced, the policy is still fine in that circumstance, even though you may not want that money to go to the spouse. But that's fine. But at the time of application, that has to exist. It must exist. What happens if no beneficiary is named in a life insurance policy? Does it A, the death benefit get forfeited? B, that goes to the insured's estate? C, does the insurer keep the funds? Or D, does it automatically go to the state? The answer is B, it goes to the insured's estate. So even if there's no named beneficiary, I mean, you've been paying on the policy, so it can't be forfeited. So you can scratch A. C, same thing there. They don't get to keep the funds. And then D, it doesn't go to the state. It goes to the estate of the person who is insured, or if there's no beneficiary. If no living beneficiary is listed, proceeds are paid to the insured's estate. This may lead to probate, which is where a court-ordered judge reviews the estate and then decides how it's dispensed of, which is why naming beneficiaries is critical for avoiding delays. Why are premiums higher for permanent life insurance compared to term? Is it because A, they include investment fees, B, they build cash value, C, they expire faster, and D, they avoid taxation? The answer, bottom line, is B. Permanent policies charge more because of part of each premium funds the death benefit and partly funds a savings element. So term insurance, on the flip side, is just pure insurance. There's no cash value savings component to it. So by default, it's going to be less in premiums per month for the same amount of coverage. What does renewable term mean? Coverage A can be renewed without proof of insurability. B, premiums decrease each renewal. C, it becomes permanent at renewal. Or D, it cannot lapse. The answer is A, coverage can be renewed without proof of insurability. So the way to remember that is it's renewable. So always look for that renewal in the name. And then the other side of it is that you can renew the term without having to take an exam. That's the case. It's insurability. So you don't have to prove you're still medically eligible to have the plan. What does convertible term allow? A, convert into an annuity at death. B, convert into a permanent policy without proof of insurability. C, convert into a higher face amount. Or D, convert into a paid up policy with more premiums. The answer here is convert into a permanent policy. So what that, bottom line, whenever you see convertible term, understand there is an option to convert the term to whole life or convert the term to universal life. What is the standard grace period for life insurance premiums? A, 10 days, B, 20 days, C, 30 or 31 days, or D, 60 days? The answer is C, 30 or 31 days. Now, here's the thing. Sometimes there are companies, and in some cases states, that may require 60 days. If you're dealing with an older population, let's say for certain insurance policies. However, the standard is typically 30 to 31 days after a missed premium, during which the policy still remains in force, and if the person dies, the insurer pays the benefit but deducts the overdue premium. Which policies allow loans? Are they term only? B, whole life and the universal life? C, variable annuities only? Or D, group life only? Well, the answer is B, whole life and universal life. Both of these accumulate cash value that you can borrow against loans. And those loans don't need to be paid back, but unpaid balances reduce the death benefit, and you have to pay an extra interest amount. Now, as a side note, as we get going through the remaining 10 questions, just want to remind you, after you pass your exam, you're going to have to find an agency to join. My recommendation is check out my company, The Dig Agency. We focus most of our efforts on working with brand newly licensed agents that want to focus on selling, not doing all this mass recruiting junk that these other MLM life insurance agencies do. And our focus is on training you to become a top producer and providing you high quality free leads, which is completely different than what everybody else requires and may cost you thousands of dollars every month to do. If you want more information on how that works, check out davidduford.com. It's critical you find a great agency to join because there's a lot of junk that's out there, unfortunately. Now let's continue. What happens if the insured commits suicide within the first 2 years of the policy? A, the death benefit is paid in full. B, no payout is made. C, only premiums are refunded. Or D, the insurer keeps all the funds. The answer is C, only the premiums are refunded. So in this case, if someone does kill themselves in the first 2 years, it nullifies the policy and it's like it never existed. So they just send the premiums back to whoever the named beneficiary is. But outside of 2 years, you can commit suicide and the policy will pay. We've had a story here where I live where a doctor did this. He maimed a bunch of people in surgery and I guess couldn't take it anymore. He was broke, and so he offed himself, and and all this money came into his family. So, and he had the policy long enough for it to happen. So it definitely is something that does pay out after the first 2 years, even if somebody commits suicide, but not the first 2 years. How long does an insurer have to contest misstatements on an application? A, 1 year, 2 years, C, 5 years only, or D, unlimited. The answer is B, 2 years. After 2 years, a policy becomes incontestable, meaning the insurer cannot deny claims due to misrepresentation or fraud except for non-payment of premiums. So the idea behind this is that when somebody takes out a policy, they may not have represented everything exactly correctly. It may be fraudulent, it may not be. But an insurance company, if somebody dies in those 2 years, they have the right to review more closely the records to make sure that no fraud or misrepresentation was committed. So they may not pay the full amount, even if they signed up for a plan that did, if those material misstatements exist. What does the free look provision allow? Does it A, cancel a policy within 10 days for a full refund, B, test coverage for 30 days without charge, C, suspend coverage temporarily, or D, receive an advanced death benefit? The answer is cancel a policy within 10 days for a full refund. So the explanation is most states require 10-day free look periods, and sometimes they're longer for seniors. That gives buyers a risk-free window to cancel and get all the premiums paid back. So just remember, 10 days is standard for free look provisions. Which is not a common life insurance settlement option? Is it A, lump sum payment, B, life income option, C, fixed period or fixed amount, or D, double indemnity payment? The answer is D, double indemnity payment, because that is actually a rider, which is an attachment to the life insurance policy that gives it extra benefits. In this case, it would pay out an extra amount of the face amount of coverage if death by accident happens. But it's not a settlement option. A settlement option is after the policy is executed and the plans pays out. Like, how does it pay out? That's what the settlement option is. So you can either have it all paid out, you can pay it out over time, you can pay it for a fixed amount of time. So there's a different option. That's what settlement amount refers to. During the contestable period, what can insurers do? Can they cancel the policy anytime? A. B, void the policy for material misrepresentation. C, deny coverage for suicide permanently. Or D, increase premiums unilaterally. The answer is B, void the policy for material misrepresentation. So the explanation is within 2 years, insurers can investigate and deny claims if material misstatements, like lying about health or smoking, are found. Then after 2 years, the policy is incontestable. Which rider waives premiums if the insured becomes disabled? Is it A, accidental death rider, B, guaranteed insurability rider, C, waiver of premium rider, or D, return of premium rider? The answer is C, waiver of premium rider. So the implicit concept here is that they waive the premium if someone becomes disabled medically, whatever their guidelines are for that policy, and then the policy stays in force just as it's described or designed to, but the client is waived of having responsibility to pay any future payments. Accidental death rider pays out an additional sum of money if the person dies from an accident. Guaranteed insurability rider typically means that the policy is guaranteed to have insurability, or the policyholders guaranteed to have insurability. And then a return of premium rider basically means if certain conditions are met, typically a period of time has passed and a number of premiums have been paid, that a return of that premium will execute, and some portion or all of the money will be refunded back to the policyholder. Which is true about withdrawing cash value from a policy? A, withdrawals are always tax-free. B, withdrawals reduce the death benefit. C, withdrawals increase future premiums. Or D, withdrawals void the contestability clause. The answer is B, withdrawals reduce the death benefit. So taking out cash value reduces policies, remaining death benefit dollar for dollar. So if my client who bought a final expense life insurance plan from us has $10,000 in coverage with $1,000 cash value, and they borrow $900 of it, well, we reduce $900 from the cash value, but also from the face amount. So that means the payout, if they die, would be $9,100, since that's $10,000 minus $900. What is the most common type of group life insurance? Is it A, whole life, B, term life, C, universal life, or D, variable life? The answer is term life, B. It's just the most common type that people get. It's the most affordable. It's inexpensive, easy to issue, and commonly there's no medical underwriting either. Which factors most affect life insurance premiums? Again, keyword here is most affect life insurance premiums. Is it age, health, and occupation? B, hobbies, marital status, and location? C, education level and income? Or D, gender only? The answer is A, age, health, and occupation. Premiums are always based off of risk, and typically the younger and healthier you are, the less you pay. However, if you do crazy things like skydive, race, drive fast cars, that could impact the premium level that you pay. And education and income don't directly affect rates either. Lastly, what is an absolute assignment in life insurance? Temporary transfer of rights, permanent transfer of ownership rights. C, giving the insurer the right to invest. Or D, reassigning the beneficiary automatically. The answer is B, permanent transfer of ownership rights. Remember it this way, absolute, that means 100%. So if you're going to absolutely assign something to somebody, that means like it's all done and over with. There's no plan B option. So it can't be temporary if you think about it from a definition standpoint. And you're assigning or transferring the ownership policy. So that means that somebody else has control. So think about this as if let's say, you wanted to, let's say somebody had dementia and you didn't want that person to inadvertently cancel their policy. So if you make the absolute ownership of the policy and say a loved one, but this person's still insured, that protects the integrity of the policy. So maybe something bad won't happen because of that protection. An absolute assignment means full transfer of ownership to another party. The insured person is still the insured. A collateral assignment, in contrast, is temporary and often used to secure a loan. So that's it on today's training here. Hopefully you guys got some clarification and some help from answering these questions. Before you go, please check the chat in the description box. We're going to link a bunch of different practice exams so that you can better prepare in order to pass this exam and get to the real work of helping people with their life and health insurance needs. And like I said, if you have any questions, comments, feel free to leave them below. Check out davidduford.com if you're interested in looking at an agency. Even right now while you're practicing to pass the exam, you need to be looking for an agency to join as well. And even if you think you have one, always look for other options because, again, there's a lot of joke agencies out there that do a poor job of training agents and providing them a system to be successful. So check out davidduford.com for more information, and good luck on your exam.